operationally, it's been the best year that we've had. You would see operational profit increased by 14-15%. In quite tough conditions, as you rightly say, people don't really save when interest rates are low because the return is so low. So the market didn't perform at all and things like that. And in spite of that, we were able to get substantial flows into the business. Our margins went up. So we've done pretty well, I think, as I've said, certainly the best. But where we didn't do well, we also have a big amount of capital backing up the risks that we take on behalf of our clients. Right. If something goes wrong and we can't deliver on the promises to clients, we have to use our own money. And on that money, we haven't done well. The previous year, we've done very well. So earnings were flat, but operational profit went up by 14%. So and that's the key measure that we drive.
I want to focus on the the investment performance and where perhaps that went wrong and what measures you're taking to try and get that right up.
Yeah. Listen, on investment performance, we've done well against the market, but the market did 0% in the year. So you can't suddenly come and think that you can outperform it. Right. We run an investment business of 500 billion rands. So you by and large follow the market, and we aim to outperform it by 100 or 200 basis points. And that's where the whole effort goes in. So we've done the 100 outperformance last year on the big insurance funds, which is a very credible performance in the difficult times. But it still gives you a relatively low performance. So in interest rates are low. Bonds did fairly well for us because of the dropping interest rates, but the equities really hurt.
Is there any possibility of a change in strategy on that front, or do you think you do what you did last year was enough and you want to stay where you are and keep the investment strategy as it is?
The investment strategy, the investment performance is fine. I think you can always do a little bit better, and we're always fine-tuning what we're doing there. But by and large, we're happy. The big issue really is the mix of assets that we have.
That's what I was going to do. Yes. Are you changing that mix of assets and also that
and this whole mix and how we do it, we have at present we have just about 30% of our assets in equities, and this is where we really performed. Some of our peers, particularly in Europe, but also in South Africa, run that at a much lower percentage so that they're not as volatile as in the market. Yeah. This for us is the optimum level. And in the whole capital, the Solvency II SAM project in South Africa, where we have to look at capital, and so we'll be adjusting and re-looking at that. So to do it in isolation now, to only just adjust it again 3-5 months down the line when we do and get the new regulations around how we need to do capital isn't really the way to go. So we'll be evaluating that throughout the year, and for the moment, we're fairly happy that we have the right mix.
Yeah. Now, but as you of course pointed out yourself, this has been a good year because you've got new business up 9% in a very difficult market, and also at the same time, we're looking at Sanlam growing earnings up 12%. You've got your personal finance up 18%. Just give us a sense of the condition of the consumer here and the kind of customer that you're targeting and the kind of issues that they're dealing with.
Yes, we've diversified the business quite a bit. In the past, this was an insurance business. Now we get about half our profit that we make, we get from insurance, from life insurance. The rest we get from short-term insurance, savings, investments, health, a range of things. In the past, we got all the money from South Africa. Now we've diversified geographically into Africa. We're in India, we're in the UK in substantial businesses, and elsewhere in Europe. We also only targeted people in one mode of distribution, mainly through intermediaries. Now we have My Way, we have a range of things. And the other diversification is we were mainly a middle market business in the past. Now we have businesses in the high end of the market. We also have businesses in the low end of the market. We bought stakes in businesses like African Life, South African Channel Life. We consolidated that into the lower end, and you would see the biggest the biggest growth area, certainly in terms of our profits, came from the lower end of the market. So there we see still opportunity. It's done pretty well. We see an opportunity in Africa. We're making an additional investment in India to really tap into that growth. So overall, you know, it's a sort of a balanced strategy and see where we can add value, and so far it's been working fairly well for us.
Let's talk about that diversification strategy, because now, as you were saying, now 81% of the business now comes from South Africa and the rest comes from other parts of the world. Let's talk about Africa first. I saw the numbers that I looked at, we're talking about 1% here. What's the target here in terms of growing that business?
Well, it is, of course, we're growing South Africa as well, but South Africa is more mature. So the idea is to grow South Africa in the order of, 9-10% over the next number of years. In Africa, we're growing at about 30%. It is not as plain from the numbers that that's the case, but we've achieved that certainly in the local currencies in the African countries. But most African currencies weakened against the rand. While the rand weakened against the pound and the dollar, in the African countries, the currencies weakened on average about 10%. So we've done pretty well and we're on target. So we try to grow at about 25-30% in Africa, which means that Africa will contribute about 20-25-30% 10 years down the line of our business.
Fantastic. What about in India? Because there's a big capital outlay there that you've put 2 billion rand that you have sunk into there. What's the targets there, and what kind of growth rates do you anticipate going forward?
Well, the growth rates there are certainly in the order of about 15-20%. There's lots of scope. India itself as an economy, well, they say they're struggling. Growth is, 5-6%. It's multiples of what we have.
With that.
Yes, certainly multiples of what we have.
Sure.
So, and there's a big demand for financial services in particular. And the whole capital outlay there is where we already have with our partner there, Shriram.
Yeah.
We already run a life business, we run a short-term insurance business. It's now to expand into their distribution outfit. They have over 1,000 offices spread throughout India. They run credit businesses, personal credit, and also credit in terms of finance of trucks and things like that. So we're expanding into that. That whole process of the investment of the 2 billion is on track, and we hope to conclude the transaction in the second half of in the second quarter of this year, in the next month or two.
Sure. So, Dr. van Zyl, when you look across the whole business, where do you see growth coming from?
Well, the growth will definitely come from in South Africa through increased diversification, and we think we can grow by about 10%. We think in Africa in the lower end of the South African market in particular, we can grow at about 20-25% over the next 3 years or so. In Africa, we can up that growth rate to about 25-30%, and then the Indian investment and really leveraging of that can get us anything from 15-20. And if you bunch all of this together, we hope to get growth, in the order of about 12-15% for the next 5 years. So this is our plan. We don't try to shoot the lights out, but it's consistent year by year, adding to what we have. And if you look at the operations profit, in spite of a difficult environment, this is what we've delivered this year.